Hey guys, welcome back. So today's video is going to be by viewer request. I've had a lot of you guys reach out to me and ask me to touch on USDA loans with regards to forbearance as well as the repayment plans. So I wanted to take some time today and touch on that. But before we get into it, my name is Jeb Smith. I'm a real estate broker here in Southern California. If you're new to my channel, do me a favor. If you like all things real estate related, whether it's buying, selling homes, or just keeping up to date with trending topics, do me a favor, hit that subscribe button and give me a thumbs up if you like the content. So, USDA loans, I haven't touched on these in the past because I guess I didn't realize how many people actually had USDA loans. I've done videos on Fannie, on Freddie, on FHA and VA with regards to forbearance and repayment options, but haven't touched on USDA just because I didn't realize how many people actually have them and wanted me to do the video. So here we are today touching on USDA. Now, if you don't know what a USDA loan is, it's typically for rural property. So if you're new to USDA in general and you don't even have a USDA loan, that's what it is. It's primarily for rural property, and that's why the majority of us here in Southern California don't have them or likely don't know about them is because we're in such densely populated areas that, we don't have USDA loans so much here in Southern California. So anyway, the forbearance process with USDA is a lot like it is for Fannie, Freddie, FHA, or VA. And that is, if you have been affected, your income has been affected in any way with regards to a loss of employment, you've been furloughed, any shape or form, you can call your lender, your servicer, and just request forbearance. Now, you don't have to provide any documentation. It's just a matter of making the phone call, and they should grant you that forbearance as part of the CARES Act. Now, that can be up to 1 year of forbearance. Now, they are likely not going to give you 1 year at the initial request. It's going to be, a shorter term, whether it's 3 months or 6 months, at which point it can be extended as you reach the end of that forbearance period up to a 1 year time frame. Now, regardless of whether it's 3 months or 6 months or a year, as you reach the end of the forbearance period, you have to figure out, how you are going to repay the missed payments. Now, USDA has put out a little bit of information, not a lot, not like Fannie and Freddie or FHA. They have put out a fact sheet, and I'm going to go over that fact sheet here in a moment. Now, it's the same fact sheet for FHA, VA, and USDA. It's all on the same sheet, but I'm actually going to read it directly so that you can see the actual verbiage, and we're going to go into the handbook that is associated with the loss mitigation options as well, so that you can see exactly what your options are if you're not able to go off their initial repayment plans or what have you. But the one thing that USDA does say, which we're going to see in just a moment, is that they do not require lump sum payments. So if the servicer, the lender that you're working with says, hey, you're going to have to pay all of this back in one lump sum, that is not correct. You do not have to pay lump sum payments as part of the USDA repayment plan. Now, the one thing they are going to do is make sure that you're in a position to start making payments again. And if you are in a position to start making payments again, they're going to set you up on some sort of payment plan. And they also mention that deferral is an option. So let's get into that form, take a look at it, read the exact verbiage, go over the handbook, and then we'll come back here in just a moment. All right, guys, so here we are. Here's the fact sheet that I mentioned in the video. What I will do is I will link to this fact sheet below so that you can download a copy or see a copy for yourself if you want the actual language in talking to your servicer or your lender. But as we go down here, this is on the second page. It does say RHS, which stands for Rural Housing Service, which is the USDA loans, does not require a lump sum payment at the end of the forbearance. Lenders should work with the borrowers to determine if they can resume making regular payments, and if so, either offer an affordable repayment plan or term extension to defer any missed payments to the end of the loan. Now, it doesn't use the exact same language that Fannie and Freddie does about deferring to the end of the loan and giving the steps and all that good stuff. It just basically says that, that lenders should work with borrowers to determine if they can make regular payments, and if so, either offer the repayment plan or term extension to defer any missed payments. So Sounds like it could be an option to defer. It's not 100% clear, but that's the language directly from the USDA. Now, it does go on to say if the borrower is unable to resume making regular payments, that basically means that if your payment today is $1,000 a month, if you can resume making that payment at the end of your forbearance period, they should work out either a repayment plan or the deferral that they mentioned there. And if you cannot, then this is where it says the lender should evaluate the borrower for all available loss mitigation options outlined in Handbook 1-355. So what I've done is I've gone and downloaded that handbook here, which we're going to take a look at. And this is, I think, 19 chapters in this handbook. Well, Chapter 18 deals with loss mitigation options, and that is what we're going to talk about here. Now, loss mitigation is, well, we'll explain it. So it says the servicer will make every possible effort to assist borrowers who are experiencing an involuntary inability to pay their mortgage and show cooperation to resolve default situations using appropriate loss mitigation tools. Loss mitigation options include informal repayment agreements, special forbearance agreements, or loan modifications. This is a lot like VA mentioned if you watch that video. Special forbearance agreements and loan modifications should be used when information in the servicing file supports the borrower's ability and willingness to pay. Now, generally with loss mitigation, you're going to have to provide documentation. It's not going to be just a conversation and they're going to give you options. There's going to be documentation that's going to be required. It's a lot like 2008. You're going to have to provide bank statements, tax returns, all of that stuff. At least that's my understanding of these loss mitigation options. Now, I'm not going to read this verbatim, but what it does go on to say here is that the servicer must attempt to obtain information on the borrower's financial condition and make an informed determination of the borrower's ability to repay the arrearage and continue making mortgage payments as scheduled. So that's where they say right there that, that they're going to try to obtain information on the borrower's financial condition. That's tax returns, bank statements, all of that good stuff. Now, these are the options that they give you. There's informal repayment agreement, which it mentioned above, special forbearance, traditional loan modifications, a pre-foreclosure sale, special loan servicing options. So it sounds like, if you don't qualify for the original repayment plan where you can continue making your monthly payments or the deferral option, there's some sort of loss mitigation tool here that they're going to use to try to help you out. So they're willing to work with you. And, unfortunately, it's not very clear as to what those options will be because it depends on each specific homeowner. Each, your current financial position is how that will be determined. So unfortunately, I can't give you clarity on what those loss mitigation options will be. It's going to, be a case-by-case basis. So again, that's the information here. You can go to, I will link again this document. The web address is there, but I'll link to this document, the handbook, in the description below if you need it as well. So there you see it, guys. The language says that if you're able to remake your payments, then essentially they are going to work with you to set up either a repayment plan and or possibly deferral. Now, keep in mind, it's specific to each lender. The servicer doesn't necessarily have to provide you with deferral like Fannie, Freddie, or FHA, right? They've come out and said that is an option for you. Whereas USDA hasn't really said it's, they have said it's an option, but they aren't saying that is what they're going to do or the option that you're going to be given. It says that they're going to, go over essentially your situation, at which point they'll decide how to repay from there. So, and if you're not able to repay, you've seen the loss mitigation options there as well. And then your other options would be selling a property or what have you if you're not able to repay, if you don't want to go into loss mitigation. So I hope that is helpful. If you do have additional questions about USDA or any loans for that matter, whether it's Fannie, Freddie, FHA, or VA, do me a favor, reach out to me directly, comment below. And if there's a video that you want me to do, a subject you want me to touch on with regards to forbearance or real estate, again, reach out. I'm happy to do it. That's where this video came from. And I hope it provided a little insight, a little value to those of you who had the questions. So again, I appreciate you watching, appreciate the support, and look forward to seeing you again on the next video. Have a great day. Bye-bye.